It is Thursday, January 16th, and we are halfway through the month, the very first month of 2025. It's been a pretty active week. We had a awesome day of stocks appreciating yesterday. Man, they flourished. And today the stocks gave up a little of their gains, not all the way. They held most of its gains. Today the Nasdaq gave back 0.89%, but it boomed yesterday. So I'll take it. That 2 day looked great. After the market closed on Tuesday night, Wednesday was a stupendous day. On the NASDAQ, went up 2.62. So it gave back a little bit of those gains, but overall, it's still a positive week. We look at the week overall, we're up about 1% collectively. And it's the beginning of this year follows 2 really good years of stocks going up in value. So for the stock market to give up some gains or maybe have some activity that shows that some investors are taking profits and selling stocks, totally understandable. And that's, I think, what we're seeing at the beginning of 2025. Very good to see you, Sergio. Thanks for tuning in. I appreciate it. And it looks like Lynn Samuel. Thanks for joining. Appreciate you joining. Looking at the indexes, again, we're still in the red when we look at the Dow over probably the last 30 days, the S&P and the NASDAQ. And we'll see how stocks perform here at the beginning of 2025. What's encouraging is some sectors are rotating. Technology has been just the star of the show for 2 years, but we're seeing a rotation into energy, healthcare, industrials, which is good. Kind of go into some stocks that have really good fundamentals. So I'm going to go into some of those today. I'll show a little more data. Hey, very good to see you, Brad. It's been a little while. I hope you're doing well, and good to see you on the live stream. Now, looking at today's like the second day in my mind of earnings. Yesterday we had earnings with the financial banks announcing their earnings, and that's what caused the big rise in the stock market. Banks showed that they made a lot of money, and it's expected with the new Republican president that there's going to be less regulation on banks. That's going to make them more profitable. So banks ended up just booming yesterday. It was really fun to watch. There's kind of a second day of some banks announcing, like Bank of America, US Bank. And I'm going to cover those two in the live stream. I thought those would be interesting to take a look at. Also, PNC, M&T Bank. A lot of banks are announcing early in the earnings calendar. The biggest name with the biggest market cap was Taiwan Semiconductor Manufacturing, TSM. And they announced and they did really well. They really grew their revenue, and that caused a real big rally in the semiconductor space. So I'm going to take a look at TSM, NVIDIA, Lam Research, and Qualcomm. Kind of go through a string in semiconductor. And also take a look at healthcare, because United Health announced today. The announcement wasn't well received by Wall Street. That stock sold off, and they took down other stocks in healthcare. So I'm going to look at United Healthcare, Elevance, and CVS, kind of go through a string there and see what those stocks look like. The stock sectors and how they performed. Looks like utilities. Let me refresh this, make sure we're looking at the most updated data. Looks good. Utilities led the day, and utilities have been doing great for the last year, especially. It's up 36%, the whole sector. Real estate was up today, but it hasn't been doing all that great. Higher interest rates really put a lot of downward pressure on real estate. Industrials showing up. That's good. Industrials have been doing quite well for a little while. And I like some industrial stocks out there. I've been buying into industrials because their fundamentals just look really good. PEs are lower, good cash flow generation. Seems like I'm getting a much better uh, stock when I look at an industrial versus trying to chase too many technology stocks. I'm going to keep owning my technology stocks, but it's important not to chase. Financials did well, healthcare did well. So in general, it's pretty positive for stocks that are rotating into sectors that didn't perform all that great for 2024. Toward the bottom, communication services was down. So this is Google, Meta, Netflix, and so forth. Technology was down, and we'll take a look at that. I know Apple was down. That was one of the bigs. It was down. So again, we're seeing a rotation from technology, communication services, which boomed, and those moved into some sectors that hadn't been getting a whole lot of love from investors in 2024 and 2023. When we look at the mega caps, it looks like the top 7 didn't either were flat, like Microsoft was just barely in the green, but Apple was down almost 4%. And they're down substantially year to date. And Nvidia was down just slightly, even though TSM announced a really positive earnings. Google was down almost 1%. Amazon was down almost 1%. Meta was down 0.5%. And Tesla was down almost 3%. So the most expensive, valuable companies really sold off. So that money was rotated into smaller caps or other sectors. Looks like, Brad, you are interested in Energy Transfer. Is that right? All right. It's doing really well for you. That's great. And energy's been really working. I know my Chevron stocks have been working. We've looked at Exxon. I know in the live stream we had on Monday, we looked at energy, and we've been looking at energy. We looked at it last week. And I said that, energy stocks in I'm going to call them mid caps, are probably going to do really well because they're really set up as oil prices rise. They really start making a lot more money in free cash flow. So I'm glad that's really working for you. All right. So the big caps, again, we're having a sell off, and this would be a healthy rotation out of stocks. Like in the case of Apple, that's $3.4 trillion. I mean, that's humongous. Rotating into stocks that are maybe 50 billion in market cap, 20 billion in market cap, and having, money, capital invested in those smaller caps. So really good rotation. I'm seeing, in a way, a really orderly sell-off, moving capital from places where it's really worked, and maybe it's that trade is getting a little old, moving into something that's going to begin to work because it has better fundamentals, better PE ratios, better free cash flow to stock price. In general, just discounted stocks. So really good to see that we're having that rotation. Sion Ken, thanks for joining. We're 17 strong on the live stream. Thank you for joining. We're less than 10 minutes into the live stream. We've already got a pretty good little audience. So I really appreciate you guys joining. So as mentioned, I'm going to go through a string of stocks, and we're going to start with semiconductor, because the biggest, most valuable company that announced today was Taiwan Semiconductor. And these guys are the biggest foundry in the world. A lot of the semiconductor companies that design chips go to TSM, and TSM does all the manufacturing for these companies, like NVIDIA. I believe Apple has a lot of their product made there, Broadcom, and others. So these guys, their revenue, 88 billion in revenue. And let me see if the data is already there. So the data that they announced this morning has already been loaded on Stock Analysis. Good job to the Stock Analysis team. And you can see that in the trailing 12 months, which is this year, it's grown revenues by almost 34%. This is a big company. So that's very, very good. You see the cyclical nature of this business. You have a run up, a slowdown, a run up, and then a slowdown. Eventually, you see these slowdowns. That's just semiconductor space for you. And so the revenue looks really good. They also announced they're going to be investing a lot in CapEx because they're expanding the number of semiconductors. And it looks like I'm not sharing my screen. Sorry about that. Sion Ken, thanks for calling that out. Let me start over again. So we got Taiwan Semiconductor up 4% today. And their announcement was real positive because their earnings growth, the revenue growth was really high. And their free cash flow is very, very good. These guys generate a lot of free cash flow and it's growing. This is in the Taiwanese currency. So I'll just kind of show that here, but then I'm going to go to a translator in a bit. And their gross margins are fairly good. This is a foundry. They don't control the IP. But even though they don't have the IP, they still have good margins. The volumes are just huge. When you go to stock analysis and you go to statistics, stock analysis converts everything to US dollars, making it easy on me. So the balance sheet, they've got almost $74 billion in cash and about $30 billion in debt. So much more cash than debt, showing that this is a very valuable business that generates a lot of cash and has just the ability to really store up cash, pay off debts, acquire companies, invest in their business, like the CapEx they're investing to make their foundries bigger. They have the cash to do that. They don't have to take loans to do that. Cash flow wise, free cash flow of 26 billion. They are putting a lot of money back into the business, which is a good thing, making themselves bigger. Now, I've owned TSM in the past. I've owned them for multiple years. It did really well with them. And I sold the stock. I just thought that the stock got too expensive. Analysts believe that the stock is a good buy, a strong buy by many analysts, but it's only discounted by about 6%. So it's not a big discount. And only 4 analysts cover it, which is a bit surprising. This is a huge company. More analysts should be covering it. And they are in agreement that it's a buy. We look at their growth. Here's the cyclical nature of this industry. You have boom periods, and it looks like their growth looks really good. It's going to slow down to the point of the business is going to contract in roughly 2 years. So that's one thing to be aware of in the semiconductor space is you have cyclical cycles in semiconductor. We have earnings per share is going to expand and then contract in 2027. And this year may be closer than we think, because I think it's going to be pulled in. The forward PE is really, really high. The current PE is 155. 2025 is expected to drop to 120, 101 in 2026, which is really high. It's just going to stay really high. So to me, this stock's just too expensive. It's gotten way too expensive. I sold this stock some time ago because it had just gotten too expensive. And I actually sold it like around here. And I did well with it. And then the stock went down. But more recently, it's really rallied. And good for investors. This thing's really worked for the past year. It's up almost 113%. Looks good. And the analysts like it. They just also agree that it's either fairly priced or, of course, close to being fairly priced. So TSM led the market, the semiconductor space, to higher levels. And I think some stocks really flourished, like Broadcom went up today, and a couple of others. One that went up was Lam Research. Lam Research provides, they're also part of the semiconductor space, and they provide a lot of the materials that semiconductor foundries and makers of chips will buy from Lam Research. And they went up about 4%. Based on how well TSM is doing, it's expected that Lam Research is also going to do really well. It's a stock that we've been covering on my channel on weekends with the investors. And it's a stock that came up out of that, some stock screens. And it was good enough where I valued it. It looked great. So I started investing in it. And I've been doing well with this stock. It's been going up nicely. Year to date, it's up almost 10%. But this is a really nice stock. When I look at the stock, I'll show you my valuation, and then I'll show you what analysts are saying about it. Hey, Mike, good to see you. Looks like you're mad about Lam Research. It's gone up too fast. Yeah, you know, sometimes it's too much of a good thing when a stock goes up too fast because we want to buy it at good prices, but it is good news that it's going up. So I started looking at this with the community in the November timeframe, and it was nicely discounted at that time. And this takes into account the current stock price. I still think it's discounted by 43%. So I've been buying into it. Even though it's been going up, I still buy into it. And I think it's 43% discounted. It's a good stock. It's growing its revenue. Now let's take a look at what other analysts have to say. So this is a big market. Well, compared to NVIDIA, it's quite small, but it's $102 billion market cap, 15.5 billion in revenue. PEs, 25 is I guess average, but the average is a little high. And then forward P is 22, much lower than we just saw with TSM. Analysts think it's discounted by 20%. I'm at a higher discount than that because I look at free cash flows and they primarily look at earnings per share. Now, what I liked about Lam Research is you see the cyclical nature of the business, and it has been contracting for 2024. That fiscal year ended June 30th, 2024. When we look at the quarterly, you can see that they're beginning to grow their business the last 2 quarters. So they've made the turn to the positive. And today is a little more evidence that, yeah, their business is probably going to do well for the next 2 to 3 years. Now, in semiconductor, I don't plan to stay in Lam Research for the next 20 years. I'm probably going to ride the stock up for maybe 2 years and then get out, and then either wait for the next semiconductor stock to buy into, buy it at the right time. I've done that with TSM. I tripled my money, got out. Did that with Broadcom, made money, got out. Now I'm building positions in Qualcomm and Lam Research, trying to do the same thing because semiconductor stocks tend to do that. This stock in particular has had its ups and downs, had a nice rise, a drop, rise, drop, and I've been buying around this period. I think it's going to continue to rise. For the 1 year, it's only 4%, but really when we look at the year to date, especially, it's up 10%. So hopefully it keeps rising and it keeps going. The forecast from analysts, 19 analysts are included in this price target average. Some analysts think it's going to go up nicely to $120 per share, probably around the valuation I have for the company. And then the worst case scenario is 78, which isn't too bad. So it looks pretty favorable. Looking at the revenue projections, the company's going to continue to grow their revenues. We're in the fiscal year 2025. It's going to end June 30th of this year. And each year, the company's going to grow nicely. 18.6% this year, 12% next year, 10%, and then 8.6%. That's good growth. And their earnings per share is going to expand nicely. Those are really good fundamentals. I like what I'm seeing. Like it so much, I bought the stock. So it was really good to work as a community, kind of look at semiconductor, try to find semiconductor that was discounted. And I forgot the company that we were comparing against Lam Research. But this ended up being what I thought was like the better of the two stocks, and I went with this one. I'm glad I did so. It's a good stock. I'm gonna keep buying into it. I'd like to build it up, and I dollar cost average my purchases of stocks. So it does make it a little tough when the stock rises, but I'm just going to keep buying shares. Even though it's going up, I'm going to keep buying shares. If it goes down, I buy shares. I really want to build up a position in Lam Research. The stock that I've been building up a position on, and so far so good, is Qualcomm. And this is a solid company. It hasn't gone up, to the stratosphere with Broadcom or Nvidia, but I've known of this company for a long time. It's a good, revenue size company, 39 billion. And their PE is 18, which is much lower than any of the other stocks we'll look at. If you look at TSM, it's up at 24, but we saw when we translate this, the PEs are really high. And then Nvidia is at 52, Lam Research 25, and Qualcomm is at 18. So this is the lowest in its class, and it's a good company. Analysts believe it's discounted. I'll show you the discount that I have as well. And similar to Lam Research, when I look at the growth of the company, especially in the quarterly, they're really beginning to accelerate their growth. So I'm seeing that this business is beginning to pick up. And as the market realizes, hey, these guys are growing, they have great margins because Qualcomm does design their chips, and they're able to operate with good margins, very good cash flow, consistent and growing cash flow. So the cash flow is where I get most of my value for Qualcomm. It's been growing. It looks good. And when I do my valuation on Qualcomm, I still have a 61% discount, even though the stock's been rising a little bit. So this one's been easier to buy into because it hasn't been going crazy, but I do have a good feeling about this based on its fundamentals. I think this stock's going to do well in 2025. It's been sold off, and I think their fundamentals look good. Their revenue's rising. They're making money, free cash flow, and their Snapdragon chip continues to find new places to be used. So a lot of devices are using the Snapdragon chipset from Qualcomm, as well as a lot of the wireless devices. A lot of the smartphones use Qualcomm technology. And last, Qualcomm has a big defense business where they sell to the defense departments. They sell a lot of communications, a lot of stuff that is classified and made for the armed forces. So they have a really solid business, and I like Qualcomm. So we went over TSM, Lam Research, and we can't cover semiconductor without looking at the GOAT, the greatest of all time semiconductor company, Nvidia. For some reason, it dropped a little today, which caught me by surprise. I thought they would have gone up with TSM, but they dropped a little bit. And when we look at Nvidia, it's a great company, but the stock, if we look at last 7 months, it hasn't really been doing much. It's down 1.5% from its peak back on June 18th to now. So that's 7 months. At that rate, it's going to go from being one of the shining stars on Wall Street to it's not appreciating anymore. And I wonder what stockholders are thinking to themselves now. Do they sell? Do they take gains? Do they wait around for a while longer? I mean, that's 7 months. We'll see. On a day like this, I am really surprised that the stock did not rally. If TSM showed good numbers, why didn't Nvidia rally? That's a big surprise. Frankly, I cannot explain why it went down. I would have expected it would have gone up. Nvidia is, a great company. It does have a high PE. But when you look at their fundamentals, especially their growth rate, just incredible. They're a big company and they grew this fast because their GPUs are in high demand. So good for them. Good for them. You see the cyclical nature of their business, slowdowns. And the reason I point that out is at some point, this business is going to slow down. It's still a cyclical company. It looks like, Brad, you have a question. So, Mike, you're going to get NVIDIA around 70. I will join you. If NVIDIA drops to 70, I will join you in buying NVIDIA. And what's my thought on AMD? Let's cover AMD. So I don't like it for a reason. It's not just emotion. It's not because I don't like their logo or something silly like that. I don't like their cash flow. Let's take a look. So AMD has been around for a long time. These guys, in a way, have been a big success story. I mean, they're $192 billion in market cap. That's great. Revenue is $24 billion. Their PE is really high, 105, and then it's going to drop down to 26. Analysts think it's really discounted. Now the stock, look at the 1 year, down 19%, while a lot of semiconductor stocks are just flourishing. So what's wrong with NVIDIA? AMD. Let's take a close look. So we see that their revenue looks good. They've been growing over the last 5 quarters. Trailing 12 months, 10% growth. That's very good. Where my valuation of AMD falls down is on this line. They just can't consistently generate free cash flows. Free cash flows are one of the main valuation techniques I have on stocks, especially semiconductors. These guys don't generate free cash flow. I showed you Qualcomm, they were generating 11 billion of free cash flow. These guys, 1.5. So this is where AMD either becomes undesirable or isn't desirable to me, is because they just don't generate free cash flow. And their business has been this way for a long time. I've been following AMD for a long time, and I've never been impressed with their free cash flow. And that's why I don't invest in AMD. At the same time, I mean, during this time, I invested in TSM during this period of time. Then I invested in Broadcom, much better cash flow. Now I'm investing in Lam Research and Qualcomm. So that's why I don't invest in AMD. That's my one critique of AMD, is their cash flow, just not very good. Now their earnings per share is going to look good. When you look at earnings per share, some analysts are going to say, hey, it's severely discounted. This analyst has a price target of 265 and the current share price is 118. Analysts think that based on earnings per share, it's discounted by almost 56%. And that's earnings per share. The company is going to grow revenues well. So that looks good. Earnings per share is going to look good. And they're going to grow their earnings per share. But I don't think I'm the only one who uses free cash flow as a valuation method. This chart should show that, hey, other investors use it too. So I'm not a buyer of AMD for that reason, is their cash flow. There's other options for me in semiconductor to buy companies that I just think are more desirable, more valuable based on their free cash flow and their other fundamentals. And that's my opinion on AMD. So we really took a nice ride through semiconductor, going through TSM, NVIDIA, Lam Research, Qualcomm, and AMD. Looking at the comments, Mike, you want to look at Zscaler? Glad to. Let's take a look. So Zscaler has, I think, been working this year. Another stock that we found working together on weekends. We get together and talk about stocks on weekends. All the members of the channel, and we were looking at the security stocks, cybersecurity stocks. So CrowdStrike, Palo Alto, Zscaler, and others. And Zscaler is kind of like probably one of the smaller caps in that space, 28.7 billion. But this one here caught my eye, and I'll show you why. First, I'm going to show you my valuation, and I'll show you what analysts are saying. So I think Zscaler is discounted by 34%. Very good cash flow generation. The earnings per share is decent, but their cash flow is where the valuation for me really pops out. And I compare them to the other stocks like CrowdStrike and Palo Alto. CrowdStrike, I think, is overpriced by 42%. Let's get back to Zscaler. So I think they're discounted by a reasonable amount. They're doing okay for the current year, 2025. Analysts believe that it's also discounted by about 20%. So I'm in agreement with these analysts, 33 of them. So a lot of people have looked at Zscaler, and they, some of them have a price target that's well above its current stock price at 270. And the worst case scenario isn't too bad, just 170, which is, about 10% below its current stock price. So it could either go up 60, 70% or maybe go down 10% is what analysts are saying. That's pretty good risk reward. If you can go up that much, but can't really go down that much. So I like how analysts, I agree with the analysts. I do my own analysis and look at analysts to see what they're saying, double check my work. Let's take a look at other fundamentals like revenue growth. We have a lot of analysts covering this, 47, 28. And they believe this, the company is going to grow for the remainder of 2025. Their fiscal year ends July 31st. Grow by 25%. It's very good. Then they're going to grow by 21% next year. 21%, almost 23%, almost 20%. That's really good growth. Excellent growth. Their earnings per share is going to expand. It's going to expand by 20%, 21%, 37%, 24%. That is good expansion. Their PE is going to come down because of that expansion of earnings per share. So these fundamentals look great. Okay. And that is what really looks good about Zscaler. When I compare their metrics, their growth against CrowdStrike, against Palo Alto, they stand up really tall against their rivals. It's a little smaller. And it, the big software companies, technology companies like Google wanted to acquire a security software company less than a year ago when CrowdStrike had their big debacle. And this one here could be an acquisition because these are very attractive businesses. Security is always a necessity. So that's Zscaler. I really like Zscaler. I've been buying into it, and I've been dollar cost averaging into Zscaler. So far, so good, and plan to have a good position in them. It would be my only pure security stock. I own Google Alphabet. I now own some Microsoft. I own Amazon. And when you own those stocks, you are owning security because Google does have security products they provide through their Google Cloud business, as well as other softwares they provide customers. Microsoft has a lot of security products they provide. And so does Amazon. Amazon AWS, they have a lot of security products. So when you buy those conglomerates in technology, you're buying security. But this one is a pure play security company that I think is a better option for me than Palo Alto, CrowdStrike, or others. So that is Zscaler. Brad, thanks for joining. Yeah, it'd be great to have you on the weekend. And thanks so much for the paid members, Mike, Brad. Really appreciate your support. And glad that you're on the live stream. We are 14 strong on the live stream. Let's keep rolling. So we went over semiconductor, did a little security. Now let's take a look at healthcare. So the biggest name in healthcare as a healthcare payer is United Healthcare. And these guys are a health insurance company, $470 billion market cap. It went down 6% today. They announced in their top line revenue didn't grow as fast as investors would have liked. It grew at 8%, which is very good considering they're so big. But other fundamentals kind of lagged. So investors sold off the stock. This company, there's no way to avoid it. I think they're still dealing with just the horrible situation with their CEO got assassinated. That was just terrible. And it's got to just have a huge effect on the company. So hopefully they can get back on track and things get back to normal for them. This company, according to analysts, is discounted and is a strong buy. I've owned United Healthcare for years, sold it and switched over to Elevance, but just have a lot of respect for the company. For the past year, the stock hasn't worked a whole lot. It started to really go down when the CEO got assassinated, which is really, really sad. And we'll see. I think this stock's just a necessity, and I think it will be back. It will be back. The company is growing their revenues. You know, they grew 8% for the trailing 12 months. That's great growth considering that their revenues are $400 billion. At 8%, that's $32 billion of growth. That's awesome. And they drive a lot of free cash flow. That's why they're so valuable. This is why I use cash flow. Is you look at all the most expensive companies on the stock market, and they all generate free cash flow. So that's why I use free cash flow as my valuation foundation for stocks. And this one here, I owned United Healthcare up until 22, and then decided to move to a different stock. And I'm glad that I own them. I made good money with them, and moved on to Elevance. So that's United Healthcare. Analysts really like the company. Just fundamentally, it's a really valuable business. And looks like 19 analysts are weighing in on price targets. And on average, they believe this stock is discounted by 21%. So United Healthcare, let's take a look at their revenue growth. It's expected that they continue to grow. In 2025, it's expected they're going to grow by 11.4%, and 6.6%, 7.5%, which is good for such a big business. And earnings per share will expand. So those things look good. And one of the things, with these big market caps, it's always, investing is an art and a science. In my analysis of United Healthcare is how much higher can that market cap get? So that's why I really question that, and I go to a different player that's doing, really well. And if I look at fundamentally, they're probably discounted better, and that's in Elevance. And I invest in Elevance, which is in the same space, but not as big as United Healthcare. Elevance is only 89 billion in market cap, so just a fraction of them. They are big. They're not quite as big as United Healthcare, but they're about 40% the size, but only less than 25% the market cap. So you can see that, hey, you're getting more revenue for the market cap. And the PE is much lower. Forward P is much lower. Discounts available on Elevance are much better. So Elevance is going to be the stock for me. It's also sold off recently, providing a nice opportunity to buy shares. And so far this year, it's doing okay, up 4.43%. Went down today, 1%. That's not bad. United Healthcare went down 6%. These guys only went down 1%. So not bad, not bad. This is a stock that I want to continue to own. And we'll continue to buy shares. Now is a good time to buy these shares. Elevance at a discount. I think they're 90% discounted because they produce a lot of free cash. And these guys, they fill a need that we have to have. Healthcare payers are a necessity. So I'm going to keep buying Elevance. I think this one's going to do well over the next 2 to 4 years. And at some point, I imagine I'll probably want to sell out of Elevance. But for now, I am a long-term investor in Elevance. I really like the discount that's offered up to me based on their free cash flows and their earnings per share projections. Speaking of which, let's take a look at their growth rate. What do analysts think about their growth? Elevance is going to keep growing 7.6%, 7.5%, and almost 10% in 2027. They're going to expand their earnings per share nicely. And their PE is going to continue to drop unless their stock price goes up. So a growing business that's really profitable, generating free cash flow, PE cannot be single digit. Not in my book. But I'm just one investor. We'll see if other investors agree with me and start buying into the stock. For now, I will buy it at a discount that I believe is a good opportunity. And when it starts to rally, I'll be glad I did so. So that is Elevance. The other stock that's caught in healthcare that has been beaten down is CVS. Ouch, down 32%. Just has been beaten down. But look at this. It's getting back up. It got knocked out, but it's picking itself up and it's fighting back. So $65 billion market cap. This is a huge company. Forward PE is only 9. Strong buy, 33%. I believe they're discounted. They are growing their business. And they have a business that's a combination of a retail business through their pharmacies, healthcare services, as well as they're a healthcare payer. And they generate free cash flow. And overall, I just think they're really, really discounted. The worst price target out there is $58 and the stock's trading at $52. So just consistently, other analysts are agreeing, hey, this stock's discounted. It's just a matter of the market didn't like healthcare in 24, didn't like it very much in 23. It's been selling off these stocks, but these stocks continue to perform, grow their businesses. In the case of CVS, it's growing its top line revenue. It is expanding its margins, expanding its net income, earnings per share, and just has an outrageously low price to earnings based on the fact that they're growing, they're profitable, generating free cash flow. So I'm glad to see CVS is going places in 2025. Hopefully it keeps going, catches the attention of other investors, jump into CVS, jump into Elevance, make those stocks go up. That'd be great. And it'd be great for value investors who catch these stocks at a discount and see them go up. I think Mike would agree to that. All right. So we went over healthcare. That looks good. All right. Let's go into Uber. Uber was really a lot of doubts came out that robotaxi is going to come out and destroy the Uber business. And it was quite incredible to see the stock sell off so fast. It went from mid 80s to 60. But it's really been working. It's been working for about a month. So it's good to see Uber stock rise, and it's been rising. Today went up, and today wasn't a great day for the market, right? NASDAQ was down 0.9%, which is what I would align Uber with. These guys are up 2.33. Over the last 5 days, up 4%. Year to date, up 13%. Over the 1 month, 14.4%. So it's beginning to work. I think investors are realizing, wait, robotaxi is not going to be here, in 2025. It's going to take years of it being rolled out. And maybe in 10 years, it's going to be a very big part of transportation. And I think Uber is going to be a part of the robotaxi industry. And their network is their moat. They have so many people riding Uber. Over 1 million people every hour hail a ride on Uber. Over 1 million. And they keep growing that number. That type of network effect and power is what's going to make Uber kind of like the Amazon within ride hailing, within transportation. So that's why I think Uber is a good stock for me to hold and hold a fairly large position in Uber. I think it's going to do well in 2025 because it was sold off so badly. And it's recovering, but I think it'll get back into the 80s. And I'll be a happy camper at some point. I think the stock's really, really well discounted. And analysts agree it's discounted. It's just the perception that robotaxi is going to hurt Uber is what's been causing the sell-off. And I think it's overdone. And I don't think it's going to be a reality. I think it's going to be a good one. So that is Uber. So Mike, you're looking at Elf. What is Elf in beauty? Is that the industry they're in? Yeah. I think we looked at Elf a few times, if I recall. So year to date, it's up a little bit. Good. Yeah, so you're trying to get a good price to sell out. Okay. Yeah, I'm not in any beauty companies. I just don't know it. And I can't make what I think is, good decisions in it. But some investors make a lot of money. This is a smaller cap, 7.5 billion. So hopefully it does catch fire and goes up for you. Yeah, that's cool. You're up 15% on Elf. That's great. All right, cool. All right, so we're going to go over new. So New Holdings is a financial services company down in Latin America. Brazil, Mexico, Colombia, Cayman Islands, Argentina, Uruguay. They're also in the United States and Germany. And they've been working for the 2025 period. I think the rally in banking helped them yesterday. And overall, this is a $54 billion market cap company. So it's not a tiny company. And it's good growth company. They are growing nicely. Revenues are growing 73% in the trailing 12 months. Really nice growth. And this is in US dollars. So these are nice chunky numbers, $5.4 billion in revenue. I like New Holdings. I like their focus on Latin America, providing financial services, banking, and all that stuff for all the folks down there. There's a lot of organic new customers, people that are unbanked, that start banking with New Holdings, which is a very different paradigm than here in the United States, where just about everybody has a bank account or has access to a bank account, where in some countries that's not the case. And I think New Holdings is organically growing and providing those banking services to a lot of people. So that looks good. I think it's a really nice stock. It's discounted. Analysts agree. And I'm glad I'm in the stock. It's given me the opportunity to buy into the stock because it really had a drop in the stock price. This stock also came out of the weekend sessions where one of our members wanted to look at it. Actually, he's located in Latin America, so it was really cool to get his perspective. And in doing the analysis, I was kind of sold on New Holdings, part of it is banks. One of the measures that I use, that I believe you should be using, is that they need to keep growing their book value, because book value is a good measure for banks. These guys went from a book value of 27 cents up to $1.59. That's phenomenal growth in book value. That is stupendous. So I was really impressed with that metric, as well as other things. Decided to buy the stock. It's a good company. The number one player in this space for me, which has been a surprise because they had such a good 2024, is Robinhood. These guys are just doing great. Almost 24% just in 2025. And in 2024, they had a great year. So Robinhood just keeps going up, and they have a lot of things going for them. They also do banking services, but their principal thing is their brokerage. They're into crypto. They're into a bunch of financial products for what I deem to be is the younger generations. And I think it's a great idea because they're catching people as they're beginning to, start their careers, make money, and then they invest with Robinhood, or they have an account with Robinhood. They have a savings account or a checking account with Robinhood, and they earn a good interest. In general, I really was a believer in their strategy, and their fundamentals show that their strategy is working. I thought it was a discounted stock when I started investing because, from their IPO is really overhyped, and it came down. So it allowed me to get into the stock at a good price and then have a good return as a result. So this one's just been really working. It's good to see that really work. So go Robinhood. At one time it was a small cap. Now I guess it's a medium cap. Hopefully someday it'll be a large cap. We'll see. Yeah, and SoFi, SoFi is a little bit like AMD for me. And again, we all get to invest the way we want to invest. I hope whoever invests in SoFi makes a lot of money. I showed you the two other stocks that I invest in, and I hope this one keeps working for investors. Look at that, 107%. And this rise is stupendous from October 1. Look at that. It's more than doubled. I don't have a 6-month, but man, that looks great. From October 1 to now, 113% return. Oh man, that's a beautiful thing. So you doubled your money in 3.5 months. Congratulations. Victory lap. Drop the mic. That's a very good return. So good stuff's happening in financial services. These fintech financial services companies are just having a great time. And you look at the new government leaders for the United States, they're going to remove regulation. They're probably going to help these companies grow faster. That's exciting. I think SoFi, Robinhood, and others that are smaller players that are more innovators are going to do really well in 2025, 26, 27, 28. So go SoFi. Nicely done, Mike. That is nicely done. Very cool. All right. So we went over New Holdings, Uber, and we'll do Allstate and Chubb, and then we'll call it a night. So one thing that's been a very big surprise to me is there's these massive fires in California. I live in California, Southern California. So these are just very destructive fires that have been causing billions and billions of damages that, a lot of the insurance payers are going to have to pony up. And Allstate, the stock hasn't really been hammered too much. There was a drop here, and then Chubb is another stock. I thought there was going to be a pretty bad down period for these stocks, but not so much. Chubb's down 1%, which isn't too bad. You see this big drop here, but it's come back. I think part of it is I live in California. I own multiple investment properties and I own my home. And I can tell you for a fact that insurance companies for the last 5, 6, 7 years, they've gotten more selective on the properties they're going to insure. And they actually dropped a lot of policyholders, especially policyholders along the coast, policyholders that are in forest areas, because the fires just get out of control, or the floods, right? So it's my guess, educated guess, that Allstate and Chubb their stocks are holding in there because they did do the work over the last 5 years to manage risk. They probably saw that, hey, we have too many homes in California and other places too, and we have to lower the number of homes that we have covered there so that we don't get caught with too many claims and we go out of business. So I think both Allstate and Chubb manage their businesses. I hope everybody who lost their homes is going to be okay and they get to rebuild their homes. But I'm just speaking about these two companies. And I'm a little surprised that they're still holding their stock price given the situation. So we'll see how this plays out. I'm in Allstate for going on 3 years. Happy to be a shareholder. I'm building a position with Chubb. I think this is really, really well discounted. These guys generate a lot of free cash. And I'm going to keep building my investment in these because they've done really well. Really good rate of return. They pay dividends. So I'm happy with my return on Allstate, and so far with Allstate's where I've had my investment. And Chubb seems to be a really, really good company to buy into. Warren Buffett likes Chubb, and he knows insurance really well. And I think Chubb offered a really nice discount recently. It came back down, in price. Really nice, price, stock price. I think it's highly discounted. And I think Chubb's going to be a good company over the long haul. It's good stock over the last 5 years. Nice upward chart, paying a nice dividend, or a little dividend, but their rate of appreciation is really impressive. So hopefully Warren Buffett is going to be successful with Chubb. I can buy a lot of shares and then see the stock go up in value. Cool stuff. So I'm building my position in Upwork and Mike. And building my position in Upwork, and I'm not in you right now. So I like Upwork. I like the business they're in. I like that type of business. And I'm building my position, dollar cost averaging. I think I'm in the positive so far. And the stock has had enough volatility where I could buy shares at a good price. All right, so let me take a look at the earnings calendar. I don't think we have anything big tomorrow. I think Schlumberger is going to announce tomorrow. They're tied to the oil industry. One more financial services company is going to announce. Fastenal is going to announce an industrial. A technology services company, Wipro, and a couple other regional banks. So that's tomorrow. It's not going to be a big earnings day. Now, Tuesday, that's going to be a biggie. Next week's going to be big. Get rested up this weekend. Because Tuesday, we got Netflix, Charles Schwab, 3M, United. And then we go on to Wednesday, we got Procter and Gamble, J&J, Abbott, G Vernova, which has been on a tear. Thursday, Intuitive Surgical, which did really well, is doing really well. Their stock's price really high. I think they're sold at a premium, but I won't get into that right now. I've been buying into Union Pacific. I think they offer a very good price to reward ratio, and I've been wanting to buy into Union Pacific for like 3 years. Finally got a good opportunity, I think. Elevance. So we've got just day after day. American Express. Next week's going to be big, but it's still not the biggest week. The biggest week, I guess, is going to be toward the end of January, where we see the big giant names. Here's Meta. Here, this day is going to be humongous. The 29th. Meta, Tesla, ASML, T-Mobile, ServiceNow, Qualcomm. Man. Apple. And then on the 30th, Apple, Amazon, Visa, MasterCard. Humongous. And then on a Friday, it's always on a Friday that the oil companies announce. ExxonMobil, Chevron. They'll announce Phillips 66. So we've got an interesting 2 months ahead of us. Get rested up this weekend. Hopefully tomorrow's a nice up day in stock prices, so we can let our hair down over the weekend and go, okay, we made some money this week. Hopefully it's not a red day. I don't like Fridays with a red day. Rather have a green day. Be much, much nicer. So that's my live stream for the evening. Thanks so much for watching. I appreciate it. Thanks everybody for your support and tuning in. And please consider being a paid member. I'd really appreciate that. Comes with perks, and I hope you can become a member. Everybody have a terrific evening, and I will talk with you soon.